Good morning, everyone, to another Daily Market Report brought to you by Mike Bjork. Today is Friday, November 14th, and we got a bit of economic news to go over today. We got the retail sales for the month of October. So previous reporting back in September, we had a negative 0.3, so there was a pullback in sales, and it was supposed to climb up to 0.2 and exceeded the expectations of 0.3%. Now, when you strip out the the big ticket items, the volatility that they create, like autos, we got 0% back in September, and went up. We were forecast at 2%, and went up also at 3%. So pretty close, but instead of the negative last month, we were basically at nil. Also, import prices for month of October seemed to worsen a little bit. We had September, worsen means actually better prices. So import prices are actually products that we're importing in are getting cheaper for us, in other words. So we had in that September, it went down 0.6%, and the forecast is supposed to be negative 1.4%, and it came in at negative 1.3%. So basically, cost of goods coming into the U.S. here are getting cheaper. Not bad news. It means the dollar is getting stronger. Consumer sentiment for the month of November, we had 86.9 back in October. And the forecast for this month was 88, and actually exceeded that 89.4. So this is a good reading. It's about the best we've seen since back in 2007. So decent numbers in the consumer sentiment, basically saying that people are feeling a little bit better where things are moving and where they're going. We also got business inventories for back this September. We had August, went up 0.1%, forecast was 0.2, went up at 1.3%. So basically, businesses are gearing up, and this looks like it could be something for jobs. So they're stocking up more inventories right now. Let's take a look at the headline news. And stock market's down. It started a little bit mixed today. It was actually for the most part, it was up, and then kind of slowly crept down a little bit. A lot of it could be, with the a lot of investors are thinking that the market might be in an overbought position. So even though we got some good news there, it could potentially go down a little bit further, have a little bit of a correction. If that happens, then we could see a better interest rates for us. So speaking of such, we're right now at 103.10, which were better than where we left off yesterday. So about 2 basis points from where we left off yesterday. So really no change in the pricing, but right now mortgage rates trends are going upwards. So meanwhile, current interest rates for home loans are basically so could be in that trend, could be a little bit more improved. But long term, because the quantitative easing going away, we're going to see interest rates start creeping up. So the mortgage rates trends will start creeping upwards. But in the short term, we may have a few bumps where we might have a little bit of improvement in those current interest rates. For home loans, it might show some improvement, as well as here in California, we're seeing those as well, California interest rates as well. All right, you guys have a wonderful day. Thanks so much for watching, and we'll get back to you guys on Monday. Enjoy your weekend. Take care.